Hi, in this video we're going to switch gears a little bit, move away from the 10K and walk through the Chipotle conference call transcript. And the reason we're doing that is Chipotle just announced their second quarter earnings for 2020 this week. And so this is a good time to take a look at the conference call transcript. And this is part of the process that I go through when I'm evaluating a stock is I try to read through the last couple conference call transcripts, and that gives me an idea of kind of what the company's working on. Works well in combination with 10K, as well as seeing what types of things analysts are focusing on. So this is the conference call transcript from Seeking Alpha. You can find those in quite a few places. Just go to Google and type in conference call transcript and the name of the company, and you'll find a few different places to pull up the conference call transcript. Here you can listen to the audio too if you'd prefer that. I tend to prefer to read them, so that's why I pull up the text version. And one of the things you're going to see up front is kind of an introduction. Hey, this is what this is, and the standard disclaimers about forward-looking statements. And then we get into the actual conference call transcript itself. And what you're going to generally find is this is split into three major parts. The first part will be kind of the big picture strategic overview of the company. The next part's going to be the financial performance of the quarter. And then the third part is going to be question and answer with analysts. And I think all of those have some value. So let's start by going through the general strategic overview. And here you can see just a lot of times they're going to start saying how great their company is. And that's going to be pretty standard. Again, it's not that the CEO is lying, and I just couldn't imagine being the CEO for a company and not thinking that your company was doing a good job and was a good company. So this is kind of a standard part of the process. Today I want to focus my discussion on three key topics. First, our efforts to take care of our people and guests as restaurants reopen for in-room dining. A little bit of some financial impact, but also some PR there. Second, provide details on our improving comp trends. And third, highlight how we've built an operating model that's designed to generate strong performance. Those last two are probably a little bit more important from an investor's perspective. Our top priorities for the rest of the year include safely running our restaurants and opening dining rooms, using best practices to support Alternative Restaurant Support Center, ensuring supply chain consistency, strengthening our digital ecosystem. A lot of general ideas out there. As of last week, about 30 restaurants remain fully closed. Remember, Chipotle has about 2,600 restaurants, so that's a very small portion. It's about 1% of their restaurants that are closed. These are mainly inside malls and shopping centers. We began to open our dining capacity in the middle of May, so that's partway through the quarter, and currently have about 85% of our restaurants offering limited in-restaurant and our patio dining, with the remaining being open for to-go services. Now that's an important point. A lot of Chipotle's are open, have been open, even if the dining room portions are not open. Since sales dropped in late March, we have been able to retain 70 to 80% of our digital sales gain while recovering 40 to 50% of our in-store sales. So you can see they're rebounding from the shutdown aspect of the COVID-19 pandemic. Our Q2 comp was down 9.8%, perfectly understandable. That's when the COVID pandemic basically hit the U.S., which includes a 1.9% headwind from closed restaurants. Our restaurant level margins were 12.2%. Adjusted earnings per share was 40%, down 90% year over year. Again, none of this is real shocking. In terms of monthly comp cadence, and this is something that's probably important, April was down 24%, May being down 7%, June finished up 2%. We're in the middle of July, and as they report this, July comps continue to improve and are up 6.4% month to date. So one of the things that you're seeing is Chipotle is rebounding very well from the COVID-19 pandemic. So including about a 1.4% positive impact from the July 4th weekend and about a 2.7% negative impact due to underperforming restaurants in the Northeast and international markets, as well as some closures. So there's going to be a few different things there. Keep in mind, we're comparing against a nearly 10% positive comp in July of 2019. So what they're saying is, hey, we were growing last year and we're growing from that higher growth period. So that's good. Overall, these trends highlight that despite these unprecedented conditions, our 5 key strategies continue to resonate with guests and position us for success in the near term, as well as giving us more confidence in doubling our restaurant base. Again, if you're making a growth argument, here's something important. Their growth is going to come from increasing same-store sales and from opening more stores, while ultimately expanding average volumes and margins above 2.5 million and 25% respectively. So they're saying, hey, we're going to hit both of those growth levers. So as an investor, that would be good. Now you do have to keep in mind, this is the company's perspective on this. They're going to tend to be more optimistic. Again, I want to stress it does not mean that they're lying or trying to mislead investors. It's just the nature of the beast. People tend to be a little bit confident about things that they're involved in. So here they talk about some of their strategies that they're trying to do. In conjunction with marketing, our stage gate process is the key enabler to develop innovation that leads food culture and meets guest requests. So this is how to reintroduce new products. And that's going to be a big factor for increasing same-store sales. You want to have new products. You want to have things customers like. So lifestyle bowls, carne asada, super green salad mix, queso, were all successfully validated in this process. And so, for example, Chipotle came out with a queso, I think about a year or two back, that was not very popular. And they remodified it, and the new version is much more popular. So our current attach rate of high teens is roughly 70% higher than the previous queso. So whether that says the last one was not that good or this one is good, it's open to interpretation. But hey, this is good news. While COVID, of course, has delayed testing menu items over the past few months, the pipeline of potential new options continues to build. So they're starting to reopen. They're getting the opportunity to test some new things, including cilantro lime, cauliflower rice, quesadillas is a digital-only entree. So we're seeing, okay, here's some new things that we're bringing out. Another thing that they mentioned in their report, and I think it might be a little bit further down, is some drink programs that they're introducing. Digital platform has been a big beneficiary of the current environment. This is huge in the COVID pandemic issue. People aren't going to restaurants and eating in as often. Instead, they're picking up, delivery, those kinds of things. So having that digital framework has been a huge part of Chipotle's ability to be successful throughout this pandemic. Order to digital sales are up from 216% year over year, represented 61% of sales. Again, don't expect that kind of digital growth in the future, but again, that's just saying, hey, we had this product in place and we were able to take advantage of that. New delivery partnerships with Uber Eats and Grubhub, as well as expanding our digital capabilities into Canada, are attracting new customers and helping reduce friction. The easier it is for people to order food, the more likely they are to go to that restaurant. Even with in-restaurant dining opening back up, we continue to see strong digital sales momentum in July. People get used to ordering things online or through phone apps, and they're likely to continue that. We are pleased that order ahead is now our fastest grower, due partly to being less promotional on delivery, partly more customers realizing the value of a pickup transaction. So there are no delivery fees, and to a lesser extent, more Chipotles. One thing that is in the back of my mind as I read this is, does this pull away from some of their margins? So traditionally, if and this is a sample size of one, but if I'm doing pickup from Chipotle, I'm less likely to get a soft drink. If I'm eating there, I'm going to get a soft drink. Well, what are their margins on soft drink versus their margin on a burrito or a bowl or something like that? And so we have to be careful when we look at, well, they're moving to more delivery, more pickup. How is that impacting margins? On one hand, there's less kitchen maintenance or dining room maintenance that goes on. On the other hand, are they losing some of their sales? And part of that's going to be, are you picking it up to take home to eat? Are you eating it in the car? So for example, if I'm ordering something on a road trip, I'm more likely to get the drink. If I'm ordering something to take back home, I'm more likely to drink something at home. So that might have some effect on margins. Also, what are their deals with Grubhub and Uber Eats and DoorDash and any other delivery company that they might be using? What is the customer paying, or what is Chipotle paying in order to provide those services? Another element that has seen a meaningful acceleration over the past few months is our rewards program, which now has nearly 15 million enrolled members. Again, that's hard to get a gauge for, because what is the average size of a reward program? And how is that impacting margins? Are you offering really good rewards, which are going to hurt your margins? Are you seeing the rewards increase loyalty and having more repeat customers? We're not getting the detail on that, but that's an important thing from an investor in determining how successful those rewards programs are. Again, as a consumer, rewards programs are something that are likely to entice me to go to a restaurant. If I'm getting some bonus for eating there, then I'm more likely to choose that. It lowers my effective price point a little bit, but it also lowers the margins a little bit potentially for the restaurant. Question I hear more frequently is, how are we going to benefit this? Even in the early stages of using customer data, we're seeing a significantly higher frequency of transactions from members versus non-members. And so what they're saying is, hey, not only do we get customer data, which can help us get a better feel for who's ordering what, but also we're seeing some of the loyalty impact there. More than 70% of current digital orders are from our members. So again, that is indicating that it is working as a loyalty program. We don't know what the cost of maintaining that is. Now, they do break that out in their financial statements, so that's one of the items from the 10K that we pick up. But those are issues that we have to think about as they grow these rewards programs. As we continue to enhance our CRM journeys, we're seeing incremental transactions across all frequency bands. And essentially what they're saying is that here we're expecting to use our leverage and see more repeat customers coming in. A lot of this is, there's no specific numbers there. It's hard to get a real feel. What has always attracted me to Chipotle, and what I believe is a key point of differentiation, is our unique purpose of cultivating a better world and a culture that has always been committed to fostering diverse, inclusive, and safe environment. Again, this is a lot of what I would call CEO speak. There is some value to that. Developing a corporate culture is very important, both in aspect of recruiting employees as well as making customers feel more satisfied with their purchases. If I, as a customer, feel that it's a better company, I may be more likely to spend an extra 5% to go there, or I may choose that option more frequently. If I feel it's a better company, I may be more likely to work there even if I'm not getting a premium as far as salary. So there are some advantages to these marketing strategies. And the last thing they're talking about is, hey, we hired a couple of new directors, welcome them to Chipotle. And with that, they turn it over to the financial report. So here we see second quarter. This is going to be more quantitative. It's really good, I think, to have gone through and built a financial model before you pay a lot of attention here, because otherwise you can get just overwhelmed with numbers. There's lots of numbers going on, and there's not a little spot in your brain to process those. So building the financial model and then reading the conference call transcript can help you tweak your model and help you better implement the model. Looking at our Q2 performance, while the comp was down 9.8%, it improved sequentially every month. Again, that's a huge plus. I'm guessing a lot of restaurants saw that. In the US at least, there was the big shutdown in March, and then it picked up going from there. So how does that impact their sales? Relative to the pre-COVID environment, in-store ordering is down 37%. While order ahead is up 140% and delivery is up 125%. Again, this has been a strange quarter as far as restaurants, and so you're going to see some huge shifts in how restaurants are handling the delivery order process. It's another example of our digital access being sticky, resulting in our July today digital mix staying nearly 50% of sales. So again, you get customers used to ordering online or ordering on their app. They're likely to continue to do that. Restaurant level margin for our quarter was 12.2%, was negatively impacted by a significant number of investments, including promotion to acquire digital customers through bonus and assistant pay, along with costs related to COVID, as well as higher supply chain expenses. So what we're seeing is, hey, there were some other things. One of the things that we've talked about is this shift to digital is not cost-free. There's a cost there. So the question is it an investment with a high return on investment or not? If we can acquire customers at a relatively low cost, that can be very beneficial to the company. If those customers are less sticky or the cost is higher, then it's a less worthwhile investment. So in my mind, this digital mix is one of the key aspects for evaluating Chipotle's success going forward. How much are they spending to acquire digital customers, and how sticky are those customers? Those are going to be a huge factor in evaluating how successful Chipotle is going to be, not currently, but over next year, 2 years, 3 years down the line. During the quarter, marketing and promo costs were elevated at 5% of sales due to free delivery. Again, what's the cost of acquiring customers? If we have higher costs because we're trying to attract those digital customers, that can lower our margins and may not be beneficial. Or it may not be beneficial this quarter, even though it's a good investment going forward. With this promotion behind us, we expect marketing spend to normalize during the second half of 2020 towards our typical target of 3%. So dropping 2% from a higher 5% level to a lower 3% level. While the investment in our people to acquire digital customers put pressure on our margins in the quarter, we're confident that these were the right investments to make and improve our brand over time. So again, you've got to think long term. Don't look just at what happened this quarter, but why did it happen? That analysis is a big part of the investment process. If you're considering the month of June where our comp turned slightly positive, we're trending a little over 2.2 average unit volume. Run rate restaurant level margin was roughly 20%. Gap relative to the theoretical 22% margin we would expect at that sales level is primarily the impact of higher delivery mix and temporary costs. So what they're saying is our margins are down a little bit this quarter, but not that big given the pandemic, and we think that these are going to normalize fairly soon. We believe our powerful and durable economic model remains very much intact, giving us confidence that we are going to hit 2.5 million average unit volume. So that means each store, what is that store going to be able to sell? And continue to expect margins of around 25%. So these are kind of reach goals. They're not there yet, but this is what they think they can sell per store and the margins they're going to have per store. We are aware that uncertainty surrounding the coronavirus pandemic makes it difficult to predict, and so therefore we're not providing guidance. And this is one of the things you'll typically get in conference calls is guidance. What do we expect for the next or the rest of the year? What do we expect next year? They're going to typically provide sales growth ranges, margin ranges, things like that. And what they're saying is, given all the uncertainty, we're not going to do that this year. We expect the margin to be high teens based on continued price volatility and a few ingredients, avocados, higher labor costs, no major COVID-related market regression in the fall. Okay, there's a little bit of guidance issue. What do you think is going to happen in the fall? Do you think COVID's going to get worse? Do you think it's going to get better? That's going to impact your outlook on Chipotle and your relative performance expectations. If you think COVID's going to get a lot better, in other words, there's going to be fewer cases, fewer deaths, the economy's going to get back to normal quicker, then you're probably going to be a little more optimistic. If you think COVID's going to be a second wave issue and things are going to get worse in the fall, then you might be a little more pessimistic. Should help us set up for a successful 2021. So they're not giving specific guidance, but they say, hey, we think we're going to be good. We ended Q2 with $935 million in cash, no debt. So, hey, we've got liquidity. We've got the ability to spend on opening new stores. We've got the ability to invest in our restaurants. We're in good shape from a liquidity perspective. Our team remains focused on reducing non-essential controllable costs. Yeah, every company is doing that. Currently pleased that report that we generated positive free cash flow. If you remember, I'm big on the discounted cash flow, so that's good, except for how much is the free cash flow? Is it enough to justify the price? And that's the point of building that DCF model. Furthermore, assuming comp improvement, we are seeing continues to give us a great confidence in our potential to generate positive cash flow for the rest of the year. In other words, hey, our cash flows are looking good. During the second quarter, they've opened 37 new restaurants, 21 having a Chipotle. Again, that's a big product mix that they're making, trying to get more Chipotles open for delivery type products, our pickup products. We recently announced a milestone with the opening of 100th Chipotle. So this is still a fairly small part of their overall product mix. Remember, there's 2,600 restaurants, only 100 are Chipotle. That's likely to increase going forward. As you can see, out of the new stores, 37 open and 21 have a Chipotle. So that's going to be a huge change going forward. If you look at the sales of our Chipotle cohort, sales are over 10% higher than non-Chipotle comp restaurants. More recent openings during COVID are actually 30% higher. It's a little bit of a false comparison there because, yeah, more people are going to be doing pickup and delivery during the COVID issue. Plan to open more than 60% of new restaurants as Chipotle with the goal of exceeding 70% in 2021. So again, just reiterating, this is going to be a big part of their strategy. Given factors out of our control, there's a pause in new ground breaks during April, but we started construction again as soon as our regions began reopening. So if you're going to open new stores, you need to have people working. Some areas were shut down, so they had a slight slowdown. That's expected to go away, and they'll be opening more stores. So their restaurant openings is probably going to be pretty close to what they were planning for 2020. Makes it difficult to offer new restaurant opening guidance. So, hey, is construction going to slow down again? We don't know. So what they're saying is we might see a few less openings, but as of right now, we're still trying to open as many new restaurants as we can. So we're about 25 minutes into this video. I'm going to stop here. And the next video, we're going to take a look at some of the question and answer.